give your stock-related queries, your answers, but I would like to give you a breaking news and giving you with the latest development. Sumant Katpalia has resigned as the managing director and CEO of IndusInd Bank with immediate effect following significant accounting lapses related to internal derivative trades that caused nearly 2,000 crore in adverse impact on the bank's financials. RBI, which had earlier approved only a one-year extension for Katpalia instead of the usual 3 years, had lost confidence in the bank's top management and urged both Katpalia and his deputy Arun Khurana to step down once suitable replacements were found. I will be shortly joined by my correspondent Vishwanath Nair, who closely tracks the space and has been keeping up with all the developments of the story. In fact, we have Vishy on the phone line. Vishy, starting with just trying to understand what does this mean for the bank and the reputation?
Well, what it means for the bank is pretty simple. It's lost a CEO at this point.
Vishy, do we have you? Okay, we've lost the line. But continuing with the story, viewers, this is important because the CEO of a bank has resigned, and especially when this bank has been surrounded with such immense negative news flow. Following Katpalia's resignation, RBI will form a committee of senior executives to discharge the duties and responsibilities of the MD and CEO until a new appointment is made. Now, this move aims to ensure an orderly transition and maintain depositor confidence amid governance and risk management concerns at the bank. Vishy, as you were saying, please continue. Vishy, do we have you? Okay, we've lost him again. I would like to quickly read out the resignation letter of Sumant Katpalia, viewers. And it says, you can see on your screen, I wish to submit my resignation from the services of the bank in relation to the ongoing derivatives discussion. Remember, this was a huge pain point for the bank. And I undertake moral responsibility, this is big, given the various acts of commission or omission that have been brought to my notice. I would request that my resignation to be taken on record at close of working hours today. That means he will no more be the CEO of IndusInd Bank from this evening onwards. I would like to thank the regulators, board, my management team members and staff for the support I got during my tenure of 5 years as the CEO. Now, this letter has been written by Sumant Katpalia himself, saying that he's going to resign as the CEO of IndusInd Bank. And we have Vishwanath Nair once again joining us on the phone line. Vishwanath, do you hear me currently?
I can hear you, yes.
Okay, amazing. Please go ahead and tell us exactly, you were trying to tell us what does this mean for the bank and how is it going to further deteriorate the reputation it has?
Yeah, so essentially what is happening at this point in time is that there is a loss of a CEO. And this CEO was, of course, appointed only for another year. The RBI's extension was only there till March of 31st, 2026, and after which he was anyway supposed to step down. So this is coming in at least 6 or 7 months, a little more than actually, about 8 months early for Sumant Katpalia. And essentially for IndusInd Bank, there's going to be a little bit of a rush now to find a suitable replacement for him. Of course, the RBI on its part has appointed this committee of directors, which will be executing the CEO's role till this suitable sort of replacement is found. Once the bank has a list of potential candidates who will take over, the RBI has to clear the name of the person who is actually going to take over from Sumant Katpalia as the CEO of the bank, and that will be the key news monitorable for IndusInd Bank next. Who is actually going to become the CEO of IndusInd Bank? Because presently we do hear some names floating around in the market from other large private banks, people who may come in and take over the role. But of course, all of this depends on how the RBI acts. Now, I want to point out that just about a month ago, there was a news report which suggested that both the CEO and the deputy CEO of IndusInd Bank will resign once a suitable candidate has been found. That will be ahead of the time of their actual tenures. That seems to have happened now at IndusInd Bank. It's a forgettable sort of a situation at this point because nobody wants to remember a accounting discrepancy being found in a CEO's tenure and then that CEO sort of losing their job because of this. So that's a difficult sort of time frame for IndusInd Bank. There is going to be a reputational hit. You will likely see that in the stock market tomorrow. Surprisingly, after the deputy CEO quit, there was actually some amount of cheer in the market because people thought that that's the end of all the issues at IndusInd Bank. But clearly, the CEO now stepping down is going to add to that misery. Therefore, I believe as far as reputational situation goes, the RBI has in the past reiterated that IndusInd Bank financially remains completely strong. No depositors need to worry about their deposits in the bank. But of course, there will be some amount of concern with the CEO stepping down. And his resignation letter also, where he mentions that there have been certain commissions and omissions during my tenure, and that is why I have decided to step down, doesn't truly reflect what actually happened at the bank. Remember, this was an issue with accounting at the bank, and that's sort of the core of any banking institution, the quality of accounting that happens at these banks. That is what determines the quality of the bank in general. So if there is going to be an accounting discrepancy, then that is definitely going to be a serious reputational issue for a bank like IndusInd.
Absolutely, Vishwanath. And also we are joined by Aditya Shah, founder, Hercules Advisors, with us now. So Aditya, directing this question to you, this is a very big move. And so how should the board act now to restore confidence among investors and regulators?
So, good evening. I've been saying this for long that it is time that the entire IndusInd management moves out. And exactly what is happening, the regulator wasn't too much happy with what happened with respect to the accounting misgivings that the bank has. And I'm not even one bit surprised that Sumant Katpalia has gone, the deputy CEO has gone, and a lot of other people in the bank have gone. So I believe that this is a positive move. The entire top management will now get replaced, and the quality of IndusInd Bank will mean it will not be too hard for them to find any replacement. So in my opinion, this is a good move. This was a move that was bound to happen, and Sumant Katpalia's position was inevitable given the fact that 2,000 crores of shareholder money was lost this quarter due to some accounting gimmick that the bank had really done. So from my perspective, now the board needs to look forward. RBI has made a committee, and that committee will look after the bank until a new CEO is found. And in my opinion, next 3 to 6 months, the bank will accelerate and find a new CEO. So this is positive. The entire fiasco is now being left behind and good for the IndusInd Bank stock person.
Right, Aditya. I actually quickly want to get my colleague Vishwanath Nair back on this. So Vishy, as you were mentioning, right, although time and again it has been made clear that the financials perhaps of IndusInd Bank remain strong, and from that front there might not be a problem. But when we see sentiment getting impacted to this level, where the CEO himself has come out and resigned today, don't you think that's going to have a significant proportion of impact on the stock market, how investors perceive this bank? And also, don't you think this impact is going to be protracted in that sense? Because we do not know how the RBI's committee is going to affect the operations of IndusInd Bank internally as well.
No, Himanshu, I think fundamentally, we'd be looking at it wrong if we think that there is going to be some kind of protracted impact on IndusInd Bank because of this. Now, yes, there was some amount of concern as to what these accounting issues were. That has been clarified through an external investigation. The CEO and the deputy CEO both have exited, citing their role in this entire thing. Because, of course, they were at the helm of these activities, so they've taken the moral responsibility and stepped down. So as far as the management cleanup is concerned, at least from where we see it, it seems to be done, at least at the top management level. You may see some more exits at lower levels, but that's not material from an investment point of view. What is crucial is to watch here is that there is some amount of now clarity as far as the IndusInd Bank scenario is concerned. All they need to do is appoint a new CEO. Now, when the Q4 results will be announced a little later, we'll see who exactly actually addresses the press or the analysts or investors in general. That will throw some light as to whether there is an internal candidate at all to be considered. From the way looks, it most likely is going to be an external candidate, but of course all of that will play out in the coming months. But as far as the overhang is concerned, that part is over. There might be some amount of nervousness or anxiety as to who is going to come, but again, that is not for anybody to worry about, because usually these bank CEO appointments are done after a considerable amount of thought put by the board and then by the RBI, and only then does a banker actually take over as a CEO of a private bank. So there's no reason to actually be so concerned that there's going to be some kind of a protracted issue. Till the CEO comes, there might be some amount of worry, but it's not going to be a panic situation, is what I want to say.
I think that clarity is very much needed, because when the headline says that CEO of IndusInd Bank resigns, I'm sure a lot of viewers might look at it from a concerning spectacle. And when you say that the overhang part of it has gone, and now the surface issue or the surface subject right now is who becomes CEO next, who takes over the problem next. Now, I would like to get Aditya back in. And Aditya, I want to ask you, the committee now acts as a stopgap measure to stabilize operations and enforce compliance. But lasting governance improvements depend on structural reforms, right? Like specialized board commitments, SRC empowerment, and stricter RBI oversight. What is your take on how all of this is going to influence IndusInd Bank in the future?
First of all, we need to clarify this. IndusInd Bank is a good bank. Deposit money is safe there. Shareholder money is also now stock has also taken a beating of 25 to 30%. I don't believe there will be a big reaction on the stock price now. All of this is in the past, first point. Second point is the cleanup has already happened. I believe when these scenarios happen, RBI does prefer external candidates. RBI does not prefer an internal candidate. So I think there would be a external candidate to take over as the CEO. Now what is going to happen is the new CEO is supposed to get newer systems and processes into the system of IndusInd Bank and has to clean up. So the bank will require at least 6, 12, 24 months to get out of this trouble and move on. But that is a good and healthy change. So what we need to communicate everywhere is deposit money is safe. The bank is undergoing a transformation, and that transformation will be complete within 6, 12, 24 months. It is a positive transformation for the bank, and the bank needs to look behind to these problems and move forward.
So just for clarity, viewers, as we're having this conversation and uncovering the layers of this resignation, one must keep in mind that the resignation is not really a negative news. As Vishy already said, my colleague Vishwanath already clarified that the overhang part of it is over. Maybe from that perspective, I'd say that IndusInd Bank is entering its next chapter, which might be stronger, more clear and transparent. And as Aditya mentioned, that the financials of the bank is good and the bank is fundamentally strong. My colleague Himakshi here wants to take up another question.
Yeah, absolutely, because Aditya rightly mentioned that the cleanup has already happened. So Aditya, does this mean that this resignation will jeopardize IndusInd Bank's near-term, business momentum? That is what you're trying to say, am I correct?
So what happened is, the day this fiasco came out, the stock was down 25%. And it was inevitable. I had posted this multiple number of times that the IndusInd Bank CEO's position is now untenable, even with the RBI. The RBI will not accept him. And it is just a matter of time before he resigns. So I don't think now this is a particular negative. This was already priced in, and I believe, in fact, this is a positive. Why is it a positive? If he would have continued for his 1-year tenure, investors would not have trusted IndusInd Bank. Investor confidence in IndusInd Bank would have been eroded. Now he's gone. A new leader will come in. And lead the bank and build confidence all over again for IndusInd Bank. So from my perspective, It will take a little bit of time, nearly about 1.5 to 2 years for the bank to stabilize now. But this is good, this is positive, and now we should look forward to who the new leader is. Q4 results will throw some light, and then from there on, the board will tell us who is going to be the new leader and what his strategy is going to be. So positive for the bank, not a problem. In the near term, the stock returns or the stock price will remain muted until investors get clarity on who the new leader is and what his strategies really are.
Okay. So just wrapping my head around the news, as both my correspondent Vishwanath Nair and Aditya Shah, founder of Hercules Advisors, said that this development that has happened is a positive step for the bank. Yes, the stock price may remain muted until we get some more clarity, but overall, it's a good news. Now we have Abhizar Divanji, founder of Newstrat Advisors, joining us now. Abhizar, thank you so much for giving us your time. We're in fact right now discussing the resignation of Sumant Katpalia, the CEO of IndusInd Bank, and our correspondent Vishwanath Nair, as well as Aditya. Both of us, when we were discussing, they said that this is a good news. This is the next chapter for the bank. People will have to look forward to who becomes CEO, and until then, the stock price may remain muted. I'd like to get your view quickly on this news that has come in on IndusInd Bank.
So I think it was the inevitable. We had the deputy CEO resign yesterday. So I think it was expected any time. And in any which way, for a long time, it was expected any time. First, after the RBI gave him only a 1-year extension. And secondly, after the news of the financial loss broke out. So at the end of the day, if you look at it, it was a logical next step that was waiting to happen. The sooner it happened, it is better for the bank. I wouldn't say it's good news, but I would simply say that it was something which was inevitable. However, I think the swiftness with which the board quickly installs a new CEO, or at least an interim CEO, I think is going to be extremely critical, because the bank needs to continue its going concern and its strategy as we move forward. The biggest problem in some of these intermittent situations is that there is no clarity on where the growth is. So whether Sumant was there or not there, there was a lack of clarity. What is required today is to bring that level of clarity, that we have a path which is going to be followed in the interim, and a quick list of 3 candidates or whatever they need to send to RBI is done quickly. RBI on its part needs to be swift and make sure it appoints somebody who is growth oriented. The problem that we have with some of these interim CEOs coming in is that we get people who are more interested in the cleanup act initially, not in the growth act. I think we need somebody who can balance both, so that the enterprise value of the bank is maintained.
Okay.
Vishwanath here. I just wanted to sort of ask you about this committee of directors that the board has proposed to the RBI. In the exchange notification, it says that the board has now sought an approval from the RBI to create this committee of directors, which will discharge the role of the CEO. I mean, the CEO role is not really a committee role, right? I mean, at the end of the day, you need to have that one person who's going to take those calls and is going to ensure that everything happens. The other part of that question is also then, does the board not have any conviction in any other senior leader at IndusInd Bank who can be elevated temporarily as interim CEO here?
Maybe the bank is in a position, but I think the board had enough time between, the incident and today to have identified somebody internally or externally in an interim role. But it's important that somebody, as you rightly said, somebody who looks after the day-to-day affairs of the bank and not leave it to a committee, because when you leave it to a committee, I think at a board committee especially, the decision levels slow down and the real growth decisions never happen. The upkeep or just the temporary maintenance decisions happen. If there was somebody within the bank, who would have been identified, then the peril with that is that he is literally then supposed to be the potential CEO candidate. for an internal candidate to, then step back into a normal role is kind of difficult always. So ideally, instead of a bank committee, had they had an interim CEO role appointed, a veteran somebody or a veteran banker or somebody who can take good banking decisions until a CEO is appointed, that would have been more preferable. And I'm sure the board would have its own reasons to form a board committee.
Mrs. Valji, another question is also, not very long ago. I think just about a week ago, the bank had disclosed that it had found certain discrepancies also in its microfinance portfolios accounting, which is now being reviewed through an internal audit process, and the global consulting firm is, of course, helping this internal audit group to verify these things. Now, that's essentially two key business areas, one being the derivative accounting and the other on microfinance, where these issues have been found. Would you qualify this as a systemic governance issue or a systemic controls issue? More appropriate, I think, the word. Or would you say this is just a one-off?
I feel, frankly, I don't know whether it's a one-off or no, but I wouldn't call it systemic either. For example, microfinance is something which is an industry-wide issue at this point in time. It's a cycle we are going through. And that cycle requires, high levels of provisioning today. Maybe that doesn't mean that these are write-off portfolios. You possibly may have some recoveries in these portfolios going forward. But at this point in time, somebody needs to make sure that the provisioning is adequate. If you look at it, some of the peer banks aggressively went and took some very large provisions. But the balance sheets permitted them to do it, so they took it, with the intent that let's us be conservative and then we'll have a freer hand to be able to grow those books and make the balance sheet stronger. Similarly, here I think it may be a case to say that let's account for the cycle now that we are dealing with a lot of bad news. And maybe that is the reason why they could have done it. So it may not be systemic, but is there a systemic problem in the microfinance portfolio for the industry at large? Yes, there is. As far as the derivatives book is concerned, clearly it was bespoke to this particular bank. So I don't think outside the bank has systemic or huge credit issues. I think the bank has pockets of issues where it needs to mend itself. It has the capital to do so at this point in time, and it should frankly work towards making it happen.
And with that, viewers, just to summarize what happened, and before that, I'd like to thank the head of Mumbai Bureau Chief, Vishwanath Nair, for joining us in this conversation and giving us some clarity. Abhizar Devanji, thank you so much. He's the founder of New Start Advisors, who gave us valuable insights into this development. And we also had Aditya Shah briefly, who joined us. He's the founder of Hercules Advisors, who gave his insights as well on the matter. And viewers, the big, large news is that the CEO has resigned, but this is a fresh new chapter for IndusInd Bank. Things are fine and things look good. Now, moving on with the show, Avinash Gorakshakar joins in on the fundamentals and Rajesh Postle joins in on the technicals. So please pick up your phone and call us on the numbers available to you. Let's head straight with the first query. Niva has written to us from Chennai. She currently holds 10 shares of ITC at 403 rupees a piece. She's asking whether or not she can buy more shares of this company. Avinash, I'd like to direct this question to you first. What is your fundamental perspective on ITC? How do you think the sector is currently performing, and what should Niva do with her 10 shares?
No, I think my guess is, ITC can be held on for the next, say, 18 months. I think, it's a very well-managed company. Most importantly, once we have some kind of tailwinds from the monsoon, I think hopefully this year monsoon is expected to be pretty normal. So I think that would obviously trigger a lot of good kind of volume growth for their FMCG business. The cigarette business is a sunset business, and where volumes are not going to be more than 6 to 8%. But cash flow management at ITC has been very good. They are sitting on a cash kitty of almost 15 to 17,000 crores. So I think the company is well managed. I would believe that, keeping a longer term view, I think definitely once the market corrects, or maybe, you get an opportunity to buy ITC at slightly lower levels, that could give a better risk reward. But anything below 400 could be a good time to accumulate.
Yes. So with that, let's go across to another query. Shubhodeep has written to us from Gurgaon saying he holds 19 shares of Mazagon Dock at 2,889, and he hasn't mentioned the time horizon. But so I'd like to take both the fundamental and technical view on it. First, I'd like to come to you, Rajesh, on the technical front. How is it faring on the charts?
Good evening. So, if we see today, the entire defensive and shipping space were in buzz, and we witnessed a strong momentum in Mazagon. In fact, it has closed at its all-time highs. Fresh new highs were created today, and we expect this positive momentum to continue in the near term. So, we expect targets of around 3,400 to 3,450, and somewhere around 2,800, the stock has a strong base. So overall, strongly placed. In fact, any dip towards 2,800 can be bought for targets of around 3,450 levels.
Understood. And Avinash, talking about the fundamental aspect, how much positive are you on the stock for investors who are new investors who want to actually enter at these levels, and for those who are actually holding it and looking for an outlook for 1 to 2 years?
No, I think Mazagon Dock definitely looks attractive from a 18 to 24 month kind of time frame. In fact, today, the stock was up by 7-8% because there were some reports that some preparation activity is going on the warships, and that actually means that there could be a lot of buzz and more activity for companies like Mazagon Dock, considering the geopolitical kind of situation. But I think on the fundamentals, I think, if somebody can take a 12 to 18 month time frame and stay invested, because, this is not a cheap stock, despite the fact that they've got a very strong order book, valuations are fair to expensive. So I think one needs to, buy in a SIP mode, and secondly, stay invested for at least the next, 18 months. Only then one could expect a decent risk reward.
Understood. Thanks for that view, Avinash. With that, viewers, we'll have to slip into a short break, but please keep sending in your queries on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
Apollo Tyres, now there's a buzz of a positive corporate development related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong,
right,
and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoter.
and welcome back to Ask Profit, only on NDTV Profit, a show where you can ask all your stock-related queries and we can answer them through our guests. Joining us this evening is Avinash Gorakshakar on the fundamentals and Rajesh Bhosle on the technicals. Welcome back, gentlemen. Let's speak to our first caller right after this very short break. Krishna is joining us on the phone line from Hyderabad. Hi, Krishna. Good evening.
Hi, very good evening.
Please ask your question.
I just want to pick a stock like IEX or Coal India. I want to invest freshly. So which is better?
Okay. Krishna, before we ask our experts which one would they recommend you to buy, why did you choose Coal India and IEX? I'm curious.
I like Coal India, as you know, it is like energy, like materials, right? In summer, maybe it will produce some, convert into energy, right?
Okay. So you're trying to bet on them from the perspective of investing in the energy space. I got that.
Yeah.
Got it. Avinash, why don't you tell us a bit about how the energy sector is faring in India, and do you think Coal India and IEX are going to be beneficiaries of it? Krishna intends to buy 100 shares of either of the two stocks that you recommend.
No, I think both Coal India and IEX definitely would be beneficiaries of the power generation theme. See, Coal India is a India monopoly business for coal, and obviously thermal energy is a very large percentage of the overall power generation breakup. So there's no doubt that Coal India would do well. But I think considering the fact that pricing in Coal India comes a little with a lag, and plus it competes with global players. Obviously, in the past few quarters, what we have seen is that pricing has been a kind of a slightly sluggish issue. So I think longer term, if the investor takes a couple of years in mind, he could definitely look at buying into the stock. The stock definitely can give him good dividend yield also because the company pays very good dividends to shareholders. On the other hand, IEX is a platform business. It's basically a platform where buyers and sellers of electricity come and do transactions. The only caveat for IEX is that despite the fact that volumes have gone up, pricing may come under constraint. There have been some reports that the government may bring the pricing under a kind of a cap for IEX. And if that happens, then I think it could not be positive for IEX. So I think in this situation, Coal India would be a better bet, but again on declines and from a longer term kind of time frame.
Okay, got it. So Coal India fundamentally seems to be a better bet, Krishna, for you as opposed to IEX. But Rajesh, I'd like to get your technical expertise here. And just from the point of view of observing how the stock is done, right? So while Indian Energy Exchange has risen about 7% in the last 6 months, Coal India has shoved off some weight, about 12% in the last 6 months during the same period. How do you see the technicals of the chart and which one looks stronger?
So even I agree with the same view that if he's looking for investment, he can invest in both the counter. But as compared to IEX, Coal India looks much better because in the past we have seen that whenever IEX there is weakness in IEX, there is very sharp falls. But as compared to that, Coal India has a relative strength. Whenever it falls gradually. But when it performs well. So overall, Coal India chart structure looks much better than IEX. So if he has to enter one, Coal India would be preferred. But I would suggest to keep diverse. He can enter both the stocks.
Understood. Thanks for that view. With that, let's go across to a caller joining us from Madurai. Hi, Suraj. Good evening.
Good evening, madam.
Yes. How can we help you on the show today?
Yes, madam. I'm holding Infosys share, madam, 500 shares.
Okay.
The price I bought is 1,900, madam.
Right.
I bought it the target at the time, February or 2,000 knots. I was expected a target, but it was sudden decline. I was panicked. I just want to know the outlook for the share. I'm ready to hold for 2 years.
Okay.
So shall I hold or exit, madam? I just want to know
Understood. So, talking about Infosys, the latest development regarding this company was that it has, started laying off, and today only it has terminated 195 trainees after the training assessment test, and 240 trainees on April 18 and 300 in March. So, these developments that are coming in, Avinash, how do you view this from a fundamental standpoint? And since he bought it at 1900, currently it's trading at 1498, sitting on a loss of almost, over 2 lakh rupees there. So what suggestion do you have for Suraj? Do you see any sort of upside, upward momentum in the coming 1 year or 2 years?
I think from a longer term perspective, I think definitely Infosys is a well-managed IT company, has a very good revenue generation model. But in the very near term, I think challenges remain. In fact, the recent quarterly performance, the fourth quarter numbers have been below the street expectations. The guidance has also not been great. So I think, in the very near term, at least for the next couple of quarters, till September, I don't think you're going to see any major re-rating here, considering the fact that unless and until we get some strong commentary, from the US markets on the kind of new order wins, Infosys is not going to be re-rated soon. And I think, rather than booking a capital loss, I think he could wait in for the next at least 18 odd months. Hopefully things would improve once the US tariff issue is resolved. So I think it's a good long-term bet, but yes, in the short term, don't expect any fireworks.
Okay, got it. And now we have Krishna calling us from Andhra Pradesh. Hi, Krishna. Good evening.
Hello, good evening.
Hi, Krishna. What's your question about?
So I have around 430 shares of Apex Frozen Food, bought at 237. So I wanted to know the target for next 1 year.
Okay, target for next 1 year. Understood.
Yes.
Rajesh Krishna from Andhra Pradesh currently holds 430 shares of Apex Frozen Foods at 237. He's incurred a loss of close to 12,000 rupees from this investment. He wants to know what kind of target price are you seeing for the next 1 year?
So Apex Frozen has been an underperforming counter. Recently, in the last couple of weeks, we have seen bounce back. This is along with the broader markets, but the undertone remains negative. So if we see somewhere around 190, the stock is forming base, but on the higher side, the stock has stiff resistance around 235 and 240 levels. So I would suggest to exit on bounce. 235, 240 seems to be a very stiff resistance. As long we don't break that, this underperformance is likely to continue. So exit on a bounce.
Okay, got it. And Avinash, could you also tell us about the space fundamentally?
I think, clearly the stock has underperformed because largely all these marine exporting companies from India export to the US. And I think now with the tariff issue looming, I think it's very clear that, markets want to get little clarity on this issue. So once the tariff issue is resolved, I think, the best part is that shrimp prices have started moving up. And Apex Frozen is in that product segment. So I think they should be able to do well. But I think unless and until tariffs are not clear, there could be a little hurdle in terms of the pricing kind of scenario for them. So I think, it's better to hold. But I think the re-rating for the stock could happen once the tariff issue with India and US is resolved.
Understood. Thanks for that view. With that, let's go across to a caller joining us from Noida. Hi, Sanjay. Good evening.
Yeah.
Yes, please go ahead with your query, Sanjay.
Hello.
Yes, Sanjay.
Yeah, I had 800 shares of Ashoka Buildcon.
Okay.
At the rate of 196.
Understood.
I want to know future outlook and can I add more? Question is for Avinash.
Okay. So, are you a long-term investor, Sanjay?
Yes.
And when did you purchase these shares? Because it's currently hovering around the similar levels.
I average it from last one to 2 months.
Yeah, understood.
So add
yeah, absolutely. So Avinash, since Sanjay has directly posed the question to you, so what's your outlook on Ashoka Buildcon, and should he be accumulating more at these levels, because currently it's trading at 193?
See, I think definitely if the investor has a time frame of at least 12 to 18 months, Ashoka Buildcon is operating in the construction, especially in the in the road infrastructure space. And I think there they already have a very large order book. So I think, this momentum in the infrastructure by the government is going to continue in the coming financial year also. And I think it's a very well managed company. The management also has been in this business for a very long time. So if you take a 12 to 18 month time frame, I think one could definitely accumulate here. But I think, returns could come in gradually because the second half normally for them is much better than the first half.
And Rajesh, talking about the technical aspects, so what are the key support and resistance levels for Ashoka Buildcon right now?
So the key support that I'm watching is 170 levels, and on the high side, the key resistance is around 205. So 205 is very pivotal. Once 205 is crossed, then the stock can pick momentum. Possibly, then the stock can head towards 250 levels. So 205 is what one needs to watch, and on the downside, 170 will be the crucial support.
Okay, got it. And now we have Nilay calling us from Patna. Hi, Nilay. Good evening. Nilay, can you hear me? I'll try once again. Nilay? Okay, Nilay does not seem to be hearing me, but Nilay currently holds 60 shares of Indus Tower at 402 rupees a piece. And I don't know whether or not he wanted a fundamental view, but his question definitely was about whether or not he can add more units of Indus Tower to his portfolio. So Avinash, I'd like to direct this question to you and sort of get your fundamental perspective, because the stock has been gaining traction recently on the back of its board meeting that will happen on the 30th of April, where various proposals like buyback, bonus issue and dividend payouts might be announced. What is your sense of Indus Tower, and do you think Nilay should go ahead and add more units of this counter to his portfolio?
See, I think the stock has rallied from almost 320 odd levels to 400 rupees. So I think the stock has already risen. But in case he wants to buy just ahead of the bonus or maybe the buyback, he could definitely, nimble into a small quantity. The company is very well managed. It's one of the largest tower infrastructure companies in India. And this year could be a record year. We could be looking at net profits of almost 10,000 crores, which last year was about 6,000 crores. So I think very well managed. And I think as long as the 5G rollout continues, and the tenancy from these towers increase, that definitely is going to be a good rewarding kind of proposition for a company like Indus Towers. So probably a small number of shares he could try his luck.
Understood. Thanks for that view, Avinash. With that, we have a caller joining us from Bengaluru. Hi, Tina. Good evening.
Hello, hi. I wanted to know about Zee Entertainment.
Okay.
I haven't bought it yet, but I'm very close to buying it. So just wanted to know what is the fundamental technical view on it.
Okay.
Are these good levels, and how long can I hold it? Is it like valued well at this point?
Yeah. Understood. So, if we talk about Zee Entertainment, in the Nifty Media Index, it was the most, affected stock and was down over 3%. So, first I'd like to come to you, Avinash, talking about the fundamentals of Zee Entertainment. As a company, are you positive on it, and should Tina be investing in this counter at these levels?
Yeah, I think if she's a high-risk investor and can keep a 2-year time frame, because even as of now, the balance sheet cleanup is yet to remain. The company's other associate companies like Dish TV are still continuing to make a loss. And most importantly, a lot of adjustments have to be made in the books. So I think despite one part of the cleanup over, I think markets were very happy when the Sony, acquisition was announced. But unfortunately, it was called off. So I think, you'll have to wait for some time. But yes, there are some inherent positives with Zee Entertainment, considering the fact that they have a very large digital library. And most importantly, in the media space, they still control a relatively good market share. So I think if you've got the next 2 years, it's a contra bet which could play off if hopefully, the balance sheet and the management's growth trajectory actually gets reflected in numbers.
Right. And Rajesh, talking about the levels. So firstly, what Tina was asking was, are these the correct levels to enter? And secondly, I'd like to ask is Zee Entertainment showing any sort of trend reversal there, post this massive sell-off?
So if we see 95 to 100 is a very strong long-term support. Even in the past, we have seen bounce back from these levels. So definitely 95 to 100 is a very strong support. On the high side, 120 is the 200 DMA. In the past, we have seen that any bounce to 200 DMA is facing resistance. So if any positive trigger, that would come once prices sustains above 120. On the downside, 95 to 100 is a very strong support.
Okay, got it. And now we have Adarsh. He's calling us from Thane. Hi Adarsh, good evening.
Hello ma'am, good evening.
Please ask your question.
Ma'am, I'm holding a stock UFlex Limited, packaging industries.
Okay.
64 numbers at an average price of 488.43.
Okay.
Madam, actually, just I want to exit this stock. Is it current level? Is it okay, ma'am, or shall I wait for 1-2 months or short period, madam, 3 months?
Okay. Adarsh, two questions. One, when did you purchase these shares? And
Madam,
two,
I am.
Yeah, please.
I'm averaging it from past 2 years.
Okay. And why do you want to exit them all of a sudden?
Actually, ma'am, just 2 months back, just I have called regarding. At that time, I was facing 5-6% loss.
Okay.
Now it is around 15% profit, madam. That's why just I want to exit. Or is it correct level to exit, madam, or shall I hold it for another 2-3 months?
Okay. Understood your question, Adarsh. Thanks for calling. Avinash, I'd like to direct this question to you once again. Adarsh from Thane currently holds 64 shares of UFlex at 488.43. He told us that he had been holding these shares for 2 years. And finally, when it swifted towards profit, he's been thinking of exiting the counter because it was consistently running in losses. What would your suggestion to Adarsh be? Do you see the current levels as a right exit point?
No, first of all, hearing the investor, I feel the investor is a bit scared. He invested in the stock and then I think he's realized that he was in loss and now he's in profit, so he wants to exit. See, let me tell you one thing, that you need to have proper conviction and patience if you want to play this game properly. UFlex is a very large packaging player, and I think now the trigger which the markets are looking at is basically a revival in rural demand, which will obviously drive FMCG kind of growth, and that will benefit UFlex. And crude prices have now come down to almost $64 to $65. So that itself is also going to give a fillip to UFlex because a large part of its raw material is crude derivative based. So I think, if you can hold on for a slightly longer period, 1 month or 3 months is very short. If he can wait for at least the June quarter or maybe the September quarter numbers, he could expect a decent risk reward even from the current levels. So I think depending upon his risk profile, he can take a call.
Understood. Thanks for that view, Avinash. With that, let's go across to a caller joining us from Noida. Hi, Kostu.
Hi, ma'am.
Yes, how can we help you on the show today?
Ma'am, I have Waaree Energies at about 30 shares.
Okay.
At the level of 1900. And I would like to know, what do the experts see this stock performing in the next 1 to 2 years?
Okay.
Should I book profits right now or should I hold it for a long period of time?
Understood. So Kostub is sitting on a profit of over 23,000 is what I can see. So Avinash, how strong is Waaree Energies positioning in India's fast growing solar energy market, and also talking about its order book and expansion plans, how do you see it compared to its peers?
No, I think Waaree Energies is possibly the best positioned solar module player because it already enjoys a very large order book, at least for the next 2 years. And most importantly, it's now getting into solar cells, which is going to make it a fully integrated player. So I think, margins would further improve. They have a large export exposure, and plus, Q4 numbers have been very robust. The management commentary has been very good. But I think one caveat is that over the next 2 years, a lot of supply is going to come in. So that could put a little bit of margin pressure on the company beyond 2 years. So I think as a strategy, he could book out maybe 50% of his holding, recover his cost, and hold the rest for the next couple of years. So I think his investment becomes zero, and obviously he ensures that he's still in the game.
Yeah, absolutely. Thanks for that. And Rajesh, talking about the technical aspect of this company, firstly, are these the correct levels for a new investor who wants to invest in this counter?
So if someone wants to enter fresh, then the correct level should be around 2400 levels. As of now, the stock has already rallied from the levels of 1800. So as of now, we are seeing some price correction. Possibly if it comes back towards 2400, that would be the key levels to re-enter.
Okay, understood. And we have Mr. Reddy joining us from Bengaluru. Hi, Mr. Reddy. Good evening. Thank you for calling. What's your question?
Hi, good evening. Actually.
Yes, please go ahead.
I am holding Ola shares around 6,500 at 67 level. Can I hold for long?
Okay. Did you say 6,500 shares?
Yes.
Okay. And at what levels did you purchase them?
Yeah, on an average it is 67.
67 rupees. Okay.
Yes.
Got it. And what's your question?
No, is it good stock to hold for long time, not for short, at least 1 year?
Okay, understood. Avinash, Mr. Reddy from Bengaluru currently holds 600 shares of Ola Electric at 64 rupees a piece. That's been his average price. The stock has now dropped down to almost 50 rupees and was down in trade today as well. And in fact, if you go by the charts, it's been consistently down on the stock exchanges. Plus, also fundamentally, how do you see the stock? Because the company has been surrounded by such heavy negative news flow.
No, I think my guess is that now competition in the electric vehicle two-wheeler market is hotting up. In fact, Ather Energy is also now going public. So I think it's going to be a little tough for Ola to actually bounce back that soon. And I think Ola is still a loss-making company. They are EBITDA negative, cash flow negative. So I think next 1 year is very difficult to look at Ola. I think if the investor can wait for at least the next 2 years, then I think hopefully things can improve. But hopefully, if all the regulatory issues are also cleared up. So he has to give a long runway to the company. In the next 6 to 12 months, I don't expect any major upside. The company will have to go through a major challenge, and maybe in the next couple of years, things could improve.
Understood. Thanks for that view. Let's go across to caller joining us from Maharashtra. Hi, Prashant. Good evening.
Good evening, madam.
Yes. How can we help you?
Madam, I am holding 35 shares of Saint Limited.
Okay.
I brought them at 1,500 levels. And I want to know about the 3 years view.
Okay.
Long-term view.
Okay. So, since Prashant is a long-term investor, Avinash, he is sitting on a loss of over 10,000. So how impactful are the macro slowdowns, in US and Europe on Cyient's client spending, and how do you see it affecting its fundamental performance?
No, I think, Cyient is also in a similar position like Infosys, but their vertical strength is basically aerospace and the railways sector, where they have a large product service bouquet. And I think the company has been quite well managed. In fact, it's one of those companies which operates in a niche space, and a lot of engineering, IT services are being provided by the company. So I think, next 12 to 18 months is going to be a challenging period. But yes, once the US tariff issue is resolved, and we get some positive, tailwinds even from other targeted markets like Europe, I think the company should definitely bounce back. I think it's a great business. If the investor wants, he can even buy in at the current levels. I would not be surprised that the stock looks to have bottomed out. Most of the negatives are in the price, but yes, you'll have to at least take an 18-month view if you want to get a good risk reward.
Okay, understood. And now we have Kumar. He's joining us from Andhra Pradesh. Hi, Kumar. Good evening. Kumar?
Hi.
Hello. Okay. It's great to hear your voice. Please go ahead and ask your question.
I just want to make a fresh investment in PSU banks.
Okay.
So which bank is better for investment? Like, is it a good time to invest right now or not?
Okay. And why PSU Bank, Kumar?
As of now, like from last couple of years, it is not making a good movement, right, in PSU Bank. So that is the reason I'm just looking forward.
Okay, got it. Avinash, I'll direct this question to you because fundamentally, it's really important to get a perspective on how PSU banking space has been unfolding, especially with so many measures coming into the ecosystem to ease up liquidity and improve credit costs. PSU banks, financials, banking space have taken a fresh momentum. How do you see, PSU bank space currently, and what are some top 2 to 3 picks that you would recommend Kumar to put his money into? He currently has a corpus of 50,000 rupees.
No, I think, PSU banks have come to limelight because recently PNB Housing delivered very strong numbers. So I think, most of the private banks have already declared numbers. So the PSU banks have yet to come out. So, I mean, the markets also, I think, have started looking at PSU banks very closely. Our belief is, that banks like Canara Bank or say Bank of Baroda, PNB could be looked upon if the investor wants to invest for the next at least 12 to 15 months. Canara Bank, trades at around 98, 99 rupees. The book value is about 112, 13 rupees. And plus, recent reports suggest that the insurance business and the AMC business are going to be monetized very soon. So that itself is also going to be a big trigger. So I think, Canara Bank looks pretty attractive. if the investor has a time frame of 12 to 15 months.
So thanks for that. And quickly, let's take a WhatsApp query. Sunita has written to us from Hyderabad saying, can I enter KFintech at current levels? Although Sunita hasn't mentioned the time horizon. Currently, it's trading at 1270 and was up in trade today over 2%. So I'd like to take both the fundamental and technical view on it. So quickly, Avinash, KFintech also came out with good quarter for numbers. So what's your outlook on the counter?
No, I think this stock can be looked upon, if a investor has at least the next 12 to 18 month time frame. See, they have a annuity business model, and the depository business and the registrar business is a very growing pie. So I think definitely KFin can be acquired, provided the investor can hang on for the next 12 to 18 months.
Very quickly, Rajesh, if you could tell us about the technical aspect of KFintech, how is it faring on the charts?
Yeah, so overall chart structure look positive. Somewhere around 1120, a strong base has been formed, and possibly the stock can head towards 1450 in the near term.
Got it. And with that, Rajesh and Avinash, thank you so much for joining us this evening and being so patient with all the queries that viewers came up with. And viewers, just to remind you, our numbers, WhatsApp numbers are always available to you. So do write in on WhatsApp, and you can also call us live on Ask Profit, both in the morning as well as in the evening, so that we can give you the best investment advice. And you know what to do. Stay tuned to NDTV Profit, because there's a lot more lined up for you right on the other side.
Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. In the last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to